HBAR finally broke out of the yearly downtrend, and this is very exciting because this is seriously just the beginning for HBAR and for the rest of the altcoin market. Most of these altcoins were just trading under that resistance level, and now they're starting to create higher highs. They're starting to break out, and this is one of the biggest things to actually focus on right now, because what this tells us is that this is the beginning of the parabolic wave for altcoins. Now, with Hedera, the thing about HBAR is that, listen, we have been talking about HBAR over the last couple weeks and even months, talking about why Hedera is going to be extremely bullish this cycle. When we look at the 1 year, this is what the chart looks like currently. Now, we did hit a wall right around 25 cents, which was to be expected. We'll go over that on the chart here in a second. But on the 7-day, we are up 49, almost 50%. We were up about roughly 60% recently, but most altcoins right now are hitting some higher time frame resistance. So when we look at the chart, let's actually dive on into it. This is what the chart looks like. This is higher time frame resistance right around 25 cents to about almost 30 cents. And that's why we're kind of cooling off here. But the main thing to focus on is the downtrend breakout, the break over the previous highs, the May highs. So we have a higher high now on this chart. So we have bullish structure formed yet again on Hedera. And also, after we get this pullback out of the way, because it's also happening on Bitcoin, if you guys do want to get a little bit more of an insight on what to expect with that pullback, definitely focus on the midnight video that will be posted tonight. I'll be going over a full market breakdown on exactly why we're going much higher. But overall, with a lot of these altcoins, this recent move is confirmation that we could be starting that parabolic wave for altcoins. Like I said, when it comes to Hedera, we're also looking at Ethereum, mainly because of phase 2. Again, we will go over that in the midnight video. But so far, this is a very good start for HBAR to actually finally break out. And also, even the HBAR Bitcoin chart is looking very good. We broke out officially on this chart as well. And we did hit the first level here, which is the May highs. We need to clear this so that we could actually get the USD chart to really kind of push above this red zone. And after we break out of this level on HBAR on the Bitcoin pair, we will reclaim the 2025 support zone from February, which will also allow us to retest the March highs on the Bitcoin pair, followed by, of course, the January and the December highs. This will have HBAR trading at those highs yet again, up here around like roughly 40 plus cents, on a path to 57 cents roughly, which will be the all-time high retest from 2021, which will lead into price discovery once it is broken. So HBAR right now, in terms of the price charts, looks very good. Now, let's go over a few things, because I do believe that Hedera, just like XRP, just like Algorand, just like a lot of these crypto projects in the space that have a ton of utility, I do think that Hedera is going to be a big part of the new financial system. If we go back to May 19th, Hedera posted this: for monetization and tokenization, see how Hedera is leading the way. We'll explore the Hedera Asset Tokenization Studio, a new bank-backed stablecoin monetization tools for creators and new resources for developers. Why am I bringing this back up? Well, because if we go over here from subjective views, we have, remember that time the Bretton Woods committee retweeted Hedera? This is for monetization and tokenization. See how Hedera is leading the way. This is this post. What's crazy about this, okay, is this is from the Bretton Woods committee. This is the same committee that FSCO's CEO and founder was a part of a conference with the Bretton Woods committee back in the beginning of June. Now, this was also regarding the BIS, so the Bank for International Settlements, crypto asset guidelines, our bank consortium work in the Philippines, and the importance of local stablecoins to manage sovereign currency risk. This is with Hedera. Again, the Bretton Woods Committee is a massive name around the financial system. If we go to their website and just go to the About section, okay, we scroll down and we see what we do. We convene leaders from industry and finance, academia, government, think tanks, civil society organizations, and other nonprofit organizations for critical dialogue on the most pressing global economic and financial issues. Through our flagship events, high-level roundtables, and private briefings, the Bretton Woods Committee provides a forum for thoughtful solutions-oriented engagement among public and private sector leaders. When we look at the membership behind the Bretton Woods Committee, so we have individual members and then organizational members. The organizational members include some pretty significant names. Major banks, Goldman Sachs, JP Morgan Chase, UBS Group, even Visa's on here as well. Then we also have gold members, right? Bank of America, Circle's on here as well. We also have Morgan Stanley, the S&P Global. We also have down here the silver members, so BNY, Barclays. I mean, guys, these are massive major players. HSBC's on here, and the list just goes on and on and on. Now, the individual ones, these are just individuals from central banks or, organizations, think tanks, things like that. Major central banks are a part of this as well, though. You also have JP Morgan here, major bank, Citi, etc. But the fact that this organization is a part of, a lot of these major discussions that reshape finance itself. And also, by the way, the BIS was brought up here. And also, when we think about the Bretton Woods Committee and all of these names tied to it, we also think about what the BIS has told us, okay? So we have here from FSCO talking about, stablecoins and, how this could manage sovereign currency risk, things like that. The Bretton Woods Committee said that this was a panel discussing the role of public-private partnerships in the acceleration of digital currencies. The BIS said that in order to achieve the finternet, the new internet, essentially, that's what they're calling it, the new financial system based around digital currencies and the internet, we need public-private collaboration. It's always been something that they've said since going all the way back to like 2021, 2020. And now we have this discussion. It's kind of crazy to see this. And of course, it is with FSCO. If we go back to 2023, specifically the end of 2023, Fresh Supply Co. integrates Hedera's token service into Continuity API, boosting lending confidence through verifiable payments. This was the announcement of that partnership with FSCO and Hedera. This is all based around tokenization, tokens, even real-time settlements, tapping into DLT. They could offer earlier payment triggers and enhance liquidity across its partner agricultural value chains. And also, even tapping into stablecoins through something like this is a huge deal for FSCO or any major company. But the main focus here is stablecoins, because stablecoins are becoming a much bigger piece of the global financial system, and it's actually helping reshape the financial system as well. $244 billion. I actually think that this is well over 250 plus billion. RWA.XYZ is actually kind of lagging, but the monthly transfer volume, the monthly active addresses, all of this has been growing over the last couple months. And when we think about stablecoins, we look at the networks here. Generation Infinity back on June 17th put out a great report. You guys are more than welcome to go and read this. It's the rise of stablecoins. The stablecoin boom of 2025, digital dollars go mainstream. The year of the digital dollars. From Walmart and Amazon to regulatory breakthroughs, instant settlement, and digital infrastructure, stablecoins have officially crossed the global adoption tipping point. Network mentions XRP, HBAR, Algo, Avalanche, USDC, ROUSD, Ondo. Yeah, these are like the top players. These are this is a great list actually of some projects that we know for certain will be tapped in. QNT is a great one. Stellar's also another one. But when we think about this, okay, the Bretton Woods Committee also posted back in April this video clip. And this is with Circle, okay? We have these technologies actually allow us to envision a much more competitive and participatory financial system. This is the evolution of digital assets highlighting their potential to deliver real-time settlement, the regulatory pitfalls, and the promise of a more inclusive financial system. Before I play this clip, remember that USDC is living on Hedera. It's also living on Stellar. It's also living on the XRP Ledger, as well as a few additional networks. I mean, listen, if we even go back to stablecoins and we just look at Circle, we could see all of the networks that Circle is living on and what networks actually have the most amount of USDC. We could see it fully broken down here. But if we actually listen closely to this, it does provide us with a great insight on just how big stablecoins actually are, and how they are really kind of revolutionizing the way that payments are made and the entire financial system as a whole. Check this out.
First of all, it's probably useful for the audience to define what it is and why it is. So, if you think about the vast majority of the world's payment systems innovations are really messaging innovations. Instructing which balance sheet to debit and credit. And along comes the stablecoin, which Klaus and others are right in having looked at it with skepticism over the last many years, and the global regulatory conversations I partly feel to blame for with a small stealth mode startup called Libra, that never launched, but nonetheless really catalyzed a lot of the global regulatory reactions to it. But why it's a breakthrough in payments is because for the first time we now have an asset that can achieve settlement finality the moment the sender and the receiver send it to each other. And so therein lies, frankly, I think it's the purpose, the why do these things exist in the first place. They were also trying to solve, quote, crypto's original sin, which was buyer's and spender's remorse. That if Bitcoin were to emerge and the Bitcoin blockchain was to emerge as a payment system or electronic money on the internet, its mathematical scarcity created a problem. And that problem was that the second you went and bought a bunch of pizza with your Bitcoin and you realized the next day you bought $80,000 worth of pizza for yourself and your 15 friends, wasn't a great use of what is today being akin to digital gold. But at the same time, any stablecoin issuer that ignored the pre-existence of electronic money rules, state-based oversight, and here in the United States of money transmission and payment activities, did so at their own peril. And so you had quite a lot of examples of stable and name-only coins like Terra Luna, which famously blew up over the course of a weekend, and many others. And so the category now lives, frankly, if you're a stablecoin issuer and you choose to be unregulated, it's because you chose to be unregulated. Even here in the United States, we have two pieces of legislation that advance that. Our model is laissez-faire. If you're going to do nothing, at least do no harm. And it's not surprising that the dollar is the reigning currency in the age of the internet. But it would be helpful to actually have federal rules so that companies like mine don't face the rest of the world and have dollars more regulated in Europe or elsewhere around the world than we have here in the United States. But that's the whole function of this activity. And I think Sir John Cunliffe, formerly with the Bank of England, said, the firms that survive these, quote, crypto winters and blowups may very well be the Amazons of the future. And I think part of what we all should push for is that future is much more distributed. Ajay Banga said recently at the Economic Club that people are everywhere, but opportunity is not evenly distributed. For the first time, these technologies actually allow us to envision a much more competitive and participatory financial system than the one we have today. And I think for that alone, we ought to encourage the innovation from an opportunity-based lens rather than a risk-based lens.
And this is what's happening right now. We're starting to see the evolution of crypto from, the time of hype and speculation and, it can be used for this, maybe it could be used for that. No, it's now being tapped in. Tokenization, stablecoins, it's all becoming a huge piece of the financial system. And it's at a time where I really do think that we should be focused on projects like Hedera. Also remember that Hedera did join forces even with Circle, Coinbase, BlackRock, and other leading institutions back in August of 2024. This is with the Institute of International Finance. This is huge, and it's a full collaboration to foster global financial stability and sustainable economic growth. At the end of the day, specific projects are being tapped in. We're starting to see the evolution of finance. We're starting to see everything change around us. Tokenization is accelerating things moving on chain. AI is accelerating the automation of things as well. And you don't get AI at scale without blockchain and DLT. Hedera's actually behind this in a huge way with NVIDIA and Intel and Equity Lab. But this is truly just the beginning of everything that's happening with this tech. over the course of the next couple years, we're going to see everything accelerate. We're going to see blockchain and DLT adoption skyrocket and surge, and projects like Hedera. I mean, today we talk about price action. Today we're looking at price charts. We're talking about, potential price targets. I don't think that we will even worry about the price action in a couple years from now. Why? Because I don't think that it's going to be a focus anymore. Because we're going to see, basically up only on the macro. Because as adoption accelerates more and more, and the space grows more and more, and the utilization of this technology surges, the price action will follow. Utility will awaken these projects in a huge way. And I hate to say this because I know that there's a lot of people that think that 50 billion is a lot in terms of like the supply for HBAR. Guess what? There's not enough HBAR. There's not enough, tokens for a lot of these projects out there when we're thinking about the scale in which they will probably see over the coming years. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, set notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord on the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.